The US dollar has gained a modest rebound after its steepest start to a year since 1973. That plunge, over 10% down, was largely driven by market fears around President Trump's aggressive tariff regime and mounting sovereign debt, which dented investor confidence. But it's now rebounding, up about 1.6% in July, as fresh economic data challenges the notion that tariffs are badly damaging the US economy. Jobs. The labor market added 147,000 jobs in June, bumping unemployment perilously low and boosting investor morale. Inflation. A headline CPI of 2.7% for June further dampens expectations of Federal Reserve rate cuts. Traders now anticipate only 1 to 2 cuts this year, down from earlier expectations of 2 to 3. Fed policy stance. Federal Reserve Chair Powell has reiterated that tariff-driven inflation has delayed any rate cuts, stressing the need for clearer data. Investors who were previously bearish on the dollar are pulling back their short positions. While some are bullish on a sustained rally, others caution this could be a seasonal summer bounce rather than a long-term trend. Wider market ripples. 1. U.S. equities. A weaker dollar earlier this year helped bolster S&P 500 earnings as multinational giants like Netflix, PepsiCo, and 3M saw foreign income translate into stronger dollar revenue. The dollar drop, around 9.5% year to date, was a boon for export-heavy companies. 2. Tariff inflation double-edged sword. However, a cheaper dollar and rising tariffs pose a twin effect. While FX helps exporters, import costs are rising. That squeezes margin and may add to consumer inflation by late 2025. 3. Equity surge. Wall Street remains resilient. The S&P 500 has rallied back toward record highs, powered by strong retail sales, better than expected manufacturing surveys, and the AI boom. 4. Political and policy risks. Key risks still loom. 1. Tariff escalation. Trump is readying additional 30% tariffs on the EU, Mexico, and others starting August 1, threatening renewed volatility. 2. Fed independence. Trump's public pressure on Powell, calling him one of his worst appointments, could unsettle markets, especially if Fed leadership shifts. In summary, the dollar looks to have turned a corner in July, buoyed by unexpectedly strong economic indicators that challenge prior concerns about tariffs. But with a fragile backdrop, tariff policy, debt trajectory, and political interference in monetary policy, this rally may prove fragile. Markets may be enjoying a summer relief rally, but staying vigilant into Q3 will be key.